Good morning, folks. Happy Tuesday. Hope everyone's had a good start of the week. So, we are just going to really run through things quite quickly because the main matter is the big story over today is that we had yield curves, the twos and tens, US yield curves have inverted even further, even deeper than when it did during the dot-com crash. I know a lot of us, including myself, weren't in markets at the time, but the dot-com crash was swift, it was quick, it was painful to a lot of people. So what the yield curve does, those who don't know, it's one of the key indicators that a lot of people tend to look at, to sort of preempt the expectation of a recession. So the inversion has continued and it doesn't look very pretty. But I'll get to that in a bit. Talking about yield curves, we'll take a quick look at US T-notes. But right now, there were reports that the JCPOA talks in Vienna with Iran and the US, basically because they've been under an embargo for quite some time now. Uh, and there were reports saying that okay, those talks are done with. All right, we're sorted. It's going through. We are going to be friends again. But overnight, Iran just came out saying, dismissed that report, saying no, this did not happen. So instead of us expecting Iranian crude to be able to hit the markets freely, that is no longer happening, and the talks will continue further. So basically, saying that okay, we have sent a reply to the draft. Talks will need to continue for us to actually get to basically middle ground and agree with what's going to happen. Which is why we're seeing a bid on crude, and we are holding above the 90 box handle at the moment after testing this low from last week, about 88.25s. Do I think we would be looking at 92s today? Yeah, why not? To be fair, unless there are talks about a what's key today, I feel, is the API numbers from overnight. Obviously, like the API numbers doesn't really reflect what's going to come out on DOE, but it does tend to move the needle, so to speak. So that's crude. Uh, the Dixie is holding above that 106 handle we talked about last week. The Spoos, look at that, just playing into these technical levels that I've marked up from before really nicely. So 4200s will be the next key point to get tested before we push further up. If you do get back to 4100s, I would start to probably like start massaging orders over there. We break below, with a stop just below here, about 40, 62, 49, so slightly below there. It's a big one for some people. Understandably, this is a daily bar chart, but very clear targets. You have these prior lows over here as T1, T2 maybe here, and then probably leave a runner in case we push further up. But with the yield curve doing what it's doing right now, there is a very so it goes to show how important word from the Fed will be. Any rumors of the Fed not willing to cut rates Q1 next year will send this market down, I feel. Uh, Same thing on this beautiful stuff going on here on the yen, as I've mentioned last week. Very clear technical levels, and it is respecting those levels. I mean, you would say, oh, but it broke through and all these things, all these wicks. Well, wicks are a part of life. You're seeing the hottest FX trade of the year being basically taken off. So you'd expect, some of these wicks to happen. It's totally natural. Similar thing on the Aussie, although you can see a bit more buying over on the support level, right? So this actually gets onto a trend line ish if I'm not wrong. Yeah, look at that. Pretty decent to be fair. Okay, so that could potentially be a trend line for the year being made. And anytime it goes in test. So right now we're looking at 69,000 as that level to be tested, which is a beautiful handle. So we get there, test maybe a wick to take out any weak buyers. Business sentiment in Australia is picking up really, really well, despite consumer sentiment, consumer mood being a bit, well, moody. All right, so that is it really for today. So FX pairs are behaving pretty nicely. The Dixie holding on to that 106, really putting a stand over there before any test of 107s there and thereabouts over here. So and this trend line still holds. That is really important. So as long as this trend line holds, even if it breaks, I would look for a hold of 105s before thinking, oh, we might go further lower. So as long as it holds above 105s, I would be comfortable uh, basically getting into FX trades that play into technicals. So any questions at all, just hit me up in the comments, hit me up in the Discord room. Have a great session ahead and a week ahead. It will get busier throughout the week. Today, data-wise, not so much, but any rumblings, rumors, those are the things you need to listen on. All right, cheers, everyone.